Home renovation loans present a fantastic way to finance the cost of home improvements and repairs into one low-rate mortgage, rather than using costly high-interest credit cards or personal loans. Since the renovation mortgage loan process is slightly different than a traditional mortgage, it's important to learn what to expect from now until closing. To help make the process go as smoothly as possible, we've compiled a list of tips to minimize issues during the mortgage process. Prior to making an offer on a home, make sure your licensed loan officer completes a property-specific pre-approval for the home you're interested in. Approval guidelines are more complex and restrictive for renovation home loans compared to other types of loans. Don't assume that you qualify for a renovation loan just because you're pre-approved for another loan type. Another important consideration prior to making an offer on a home is hiring a plan consultant to do a feasibility study. This will determine the cost of your improvement you wish to complete, as well as the cost of any required repairs needed to meet the loan program standards for health, safety, and structural integrity. Only plan consultants, not contractors, have the foreknowledge to identify required repairs. An accurate itemization of improvements and required repairs is essential to ensuring you're pre-approved for the amount of financing requested, so there are no financing issues weeks into the mortgage process. Another reason to have a plan consultant involved early on is to determine which version of the home renovation loan you need to use, the limited or the standard. The limited version does not allow for structural work and total rehab costs cannot exceed $35,000, whereas the standard version allows for structural repairs and rehab costs to exceed $35,000. Due to the different risk levels for these programs, each version of the rehab loan has its own fee structure, and interest rates differ between the two programs. Understanding which loan program you need or desire will help you determine how to properly structure your loan, which rehab items you wish and need to complete, and be certain you qualify for financing prior to making an offer. After the plan consultant has itemized the cost of elected improvements you wish to complete and any required repairs to meet the loan program standards, you're ready to make an offer on the home. At this stage, it's advised that you already have identified a contractor to perform the renovations. If not, it's imperative that you select your contractor within 1 week of signing a contract to buy a home, as failing to do so will likely lead to delays. When selecting a contractor, here are a few important considerations. Loan applicants and relatives of loan applicants cannot be the contractor. The contractor must hold a current valid license to conduct business in the state the project is to be completed in. He must be insured for at least $1 million. Although it's not required, you might want to consider using a contractor who has experience with home renovation loan projects. Make the contractor aware that there is no upfront deposit money and that there's a 10% holdback for each draw that isn't released until the final inspection. Advise the contractor he will be expected to pull any required permits. Do make sure your contractor understands that for a standard 203K, there are no funds released upfront. Your contractor will have to carry the project until the first draw. Once you do have a fully executed purchase contract, it is imperative for you to have the plan consultant and the contractor meet the property appraiser at the house. They will review the costs of the approved work to ensure all parties understand the repairs and costs, so the appraiser can properly appraise the home's value. This overview is the baseline information you need to know, but please contact your licensed loan officer today for a more comprehensive overview of each step in the process. First World Mortgage Corporation, financing the American dream.